Any questions? No, no questions. So going into tomorrow, where do we always like to start? The daily, right? We're gonna go to the daily, and we're gonna map out that low, the last low that we had that never got touched, because it's part of that relative equal low we talked about, right? It's not equal. There's a slight SMT or a slight slant to it, but this is the low that we're looking at, right? This is the low that didn't get hit yesterday. So we're going to keep it mapped on there because there's still a possibility, right, that we continue this bearish trend and we drop. There's also the possibility that we what? That tomorrow this specific candle does what? It inverses this daily fair value gap, right? We come up and we drop down and we go higher, right? Depending on what we think is going to happen tomorrow, we can totally shift structure and create a bullish move since we did what? Since we rejected discount. Since we rejected discount and failed to do what? Trade outside of the range, right? And stay outside. We did what? We stayed inside the range and now we're continuing price in a bullish direction, but we need higher time frame confirmation. So what would be the best confirmation for us if we're looking to continuously take bullish setups? Is we're looking for the daily candle or possibly tomorrow's candle, shift structure and change the order flow, close above equilibrium and start trading higher and higher and higher. But for now, the one thing that it looks like we're tapping into, right, was that 4 hour order block that we had from yesterday, but more importantly the higher time frame fair value gap, right? We've tapped into the higher time frame fair value gap and rejected, and it looks like we're trying to make our way back into that fair value gap to fill this liquidity because we did what? Yesterday we hit external range. We took out our external range liquidity, and now the next thing that we have is internal, 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 and then what? This big internal range liquidity, which would take us to external, right? If we're going from an internal to external mapping. So the 1 day fair value gap, I'm not going to plot. I'm going to leave it free. I do know we have that liquidity, but since we have such a strong bullish trend, I want to see us continue the bearish trend. I want to see us take these lows out. We still have these lows down here, but I want to see us take these lows out. If not tomorrow, right? Then when we have CPI, I want to see some bearish action. So I'm looking towards more bearish price. Sorry, I'm looking towards more bearish price. So our 1 day, we're gonna map out our previous day's array, which we already traded above, right? And then we have this day's array, which we'll be trading into next, right? So we got this bad boy here, but we also have this one that we're trading into, right? This array is what we're trading in because we've broken out of this array. So looking at bearish price, where would we look for a rejection? And this is why I didn't map out the 1 hour or the 1 day. Our rejection is where? Equilibrium. Look where equilibrium sits on this daily fair value gap. Coincidence? Right on the equilibrium, right on the 50%. So I don't have to map out my daily fair value gap because my PD array, right? My PD array's equilibrium of yesterday's range or 2 days ago range is the 1 day equilibrium. So again, above this here, we're bullish. Why are we bullish? We're bullish because we want to see price shift structure, market structure, and we want to see price continue higher, take out equilibrium, and then go even higher. So that level is still important, right? That 21 124.50, that's going to be our trigger. That's going to be our, hey, we're bullish. Look for longs above this, but we need to see confirmation. We need to see confirmation in the form of candle closure and in the form of retest, right? Higher time frame is just going to be one big daily candle. Lower time frame, we want to see us come down and test that equilibrium, right? We can even drop under, but we want to see us come down and test that equilibrium and do what? fail to close underneath or fail to stay closed underneath of this range, which is underneath our equilibrium of our fair value gap, fail to stay closed, and then we can possibly see more bullish price. So we have what? We have our bullish and bearish level from the 1 day because it lined up so well with our 1 day fair value gap. We have our previous day's array here, right, which was yesterday's high and yesterday's low mapped out as a PD array. We've already traded outside of it, and now it looks like we're trading back into it. But this 21,124 is going to remain our, hey, if we're above this, we're bullish. If we're below this, we should still be looking for short opportunities. So let's go to the 4 hour. And that order block that we had formed, right? It's not obsolete. It's still there, but we have a more important level, right? Our more important level is that 50% of the daily fair value gap or equilibrium of 2 days ago's range. So we're still going to keep this up here. We have the 4 hour order block here that we had mapped out. We're going to leave it because it makes sense for what? For us to trade above and retest, which would be what? Our breaker entry to go higher. The 50% is still going to remain our draw. This is our draw for now, because I believe price, right, has shifted structure on the lower time frame, right now on the 4 hour. We've shifted structure. It is still possible to go straight up, but whenever we have a change of character or a break of structure like we spoke about, there's always a pullback, right? An important market structure shift or an important break of structure, right, which would be this bad boy here, is going to offer some type of pullback. And I believe that what we're sitting in right now is the pullback to go higher. So for the 4 hour, we're going to look to that gap that was created or the 4 hour fair value gap with the gap included. So if we grab our rectangle, right, we have the low of the fair value gap. This would be the low with the gap, right? Like there are gaps right there. That's our low, but we also have what? This big volume imbalance, right? So I want to map both of these. I want both of these as my reason to stay bullish, because it's very important that when we do, and we already did it, right? When we do create a gap or an island, these are called island candles. When we do create an island candle, when we come back to retest the gap, if we fail to go into the range of under the gap, there's a higher probability that we will trade away from the island and leave it unfilled, right? On the higher time frame. On the lower time frame, we trickled through and we like barely tapped the low of the island, and then we like shot up. That's what this candle is right here, this one. So I want to map what? I want to map both imbalances. Oops. I want to map both imbalances as one. The fair value gap, which would be from here to here, and the imbalance, which would be this wick here. So I want to map them both out, which leaves what? A 50% here to stay bullish. So for now, I want to see price come down, right? That'll be one narrative, and tap that 50% and go higher. That's one narrative. Let's go to the 1 hour to see what can possibly prop us up, because we're bullish. Remember, we're bullish on price, so we want reasons to go higher. We don't want to look for reasons to go lower. We want to anticipate price being bullish, and we want to anticipate bullish reactions. Where can price hit and stay above water? Where can price hit and have a rejection or some type of indicator that shows us price is going to remain in a bullish structure, right? That 4 hour fair value gap that we had lines up really well with what? With London high, right? Here's London high. And also that island we created, the gap. Right now we're on an island, right? We haven't filled the gap fully. We came down and tapped it and kept going. But on the higher time frame, we technically have not closed in or under the island. So that's what I want to see, is I want to see the island get filled on the higher time frame, right? And go higher. That was the one scenario we had. Looking at what can keep price higher, this specific fair value gap that we have is perfect. We don't need to change anything, right? We don't need to add an extra fair value gap here. We don't need to map out only the island and make like a red zone, like, hey, this is the island mapped with the 4 hour. All we need is to understand that this 4 hour is important for keeping bullish structure, right? If we create a market structure shift here and a market structure shift here on the higher time frame, if we drop lower, right, your market structure shift turns into what? It turns into a break of structure to the downside. And then if we come back up and fail to stay under the 50% and go higher, then the market structure shift is valid, right? Then the MSS is valid because we did what? We created the shift in the market, right? This is that pattern I showed you guys. We created the shift in the market. Now, if we fail to stay above the 50% and we drop lower, then we've done what? We will create another break of structure here and so on, breaking structure lower and lower and lower to the lower prices that we can look at when we get there. But for now, right, those would be my that would be my second scenario. My first scenario is what? Hit that 50% and go higher. My second scenario is trade under the 50%, invalidate this market structure, and do what? Come back up and fail to stay above the 50%. Those are my two narratives going into tomorrow, and then we have one more narrative. Those two narratives are what? Bearish narrative and a soup of what? Of Asia. If we drop lower, then we soup Asia and we go higher. Our next narrative is going to be our take the bullish turn, right? We're going to keep trading higher during Asia, during London, create a final break of structure or final market structure shift up here, and do what? Come down, tap, and go higher. So we have our three narratives going into tomorrow. And the 4 hour plays a big part in it, right? One, we use the 4 hour as intended and bounce off it. Two, we trade into the 4 hour, fail to close the 50%, which is technically what we're doing now, and bullish price. And then number three, right, is we have a drop underneath what? Underneath the range of the previous day equilibrium or underneath the 4 hour fair value gap, come back into the range, fail to stay in it, and start trading outside of the external range of the daily PD array back into this is 2 days PD array, my bad. This is 2 days PD array, and then trading into yesterday's PD array, where we will fail to stay inside of yesterday's range and trade even lower. So for me, the one setup that I want to look for going into London and then waking up and seeing what happens during New York is I would like to see price continue bullish action and then drop us and continue higher. That's what I would like to see overnight, is this scenario here, this one right here. Doesn't mean that the other three are not going to play out, and it also doesn't mean that I'm not going to be right, or I'm going to be wrong. It just means that this is what I want to see happen. I want to see price trade above the 4 hour, use it as intended as just a straight 4 hour fair value gap, and trade higher, because we do have that island that we failed to fill, right? So this is my number one, what I would love to see. And then we have bearish price, and depending on how we react to the 50% is where I'm going to look for my shorts, right? Obviously, if we fail to take that 50%, we would look for longs and confirm longs above our equilibrium or the middle of the daily fair value gap. And I want to confirm more shorts when we fail to take the 50% of that 4 hour, because then we're what? Then we're 2 times bearish, right? Because we're under our zone, but then we're also underneath the 50%. So now I have 2 times the bearish mind power to get into a bearish trade. Hopefully that makes sense. So that's what I want to see going into tomorrow. Do you guys have any questions? Yes, Sep. Closing above that daily fair value gap, closing above that daily, I was just reading the rest of the chat. Closing above that daily fair value gap is very important because it creates, let me show you guys, go back to the 1 day, because it creates the ERL to IRL mapping, right? We took out ERL, right? Remember, these are 3 daily lows. We took out ERL, and then now when we take out ERL, what do we look to next? We looked for IRL. So coming up, right, taking out ERL, where's the next imbalance, right? It's the daily. So above that 50% is very important because we'll do what? We'll fill the full imbalance and we'll attack what? External range. So filling that and that imbalance, filling that daily fair value gap is going to switch our draw and liquidity. Our draw right now is what? Our draw is the 50%. Once we trade above our draw, that moves our draw liquidity to where? To the high of day, right? Once we take a draw on liquidity, or once we take our level, it's creating what? But what I just showed is that break of structure, right? And if we fail to stay above the break of structure, then we drop back into the range, which is what? Which is a very important internal range, which means that we've taken enough internal liquidity, and now we can do what? We can trade into the 50%. We've taken enough internal, so now we attack what? Externals, which makes us drop down, which makes perfect sense for our structure, right? So that halfway point, or the 50% of that daily imbalance, is very important for us because it's where I believe structure is going to either provide the pivot point to go higher, or it's going to provide the continuation of what? Failing to take this important external high and failing to not soup it, but failing to take it and drop lower, which we would then attack this low and then continue our structure down, which would confirm our analysis from a couple weeks ago or a week ago, which is this low wants to get touched. Go back to the chat. His Wi-Fi is being weird. You watched it. Good night. I think Dick answered that, but yeah. New day opening gaps, or like when we create islands, right? When we basically trade away from whatever last candle is. So our daily candle, right? This is a perfect example, right? This is our we'll go to our daily time frame, and let me get rid of the drawings again real quick. But these island candles that get created, right? We don't always trade and fill them, right? This is a perfect example right here. Like when we created this drop and we opened, excuse me, and then we came up higher and we dropped again. Well, this candle closed up here, right? Sorry, up here is where it closed. But then when it dropped, it did what? It created its own little island. So like if we do a bar replay to this day, right? It's an island, like it's just all by itself. And even when we have the next candle that got created, right? This is the 1 day. I saw the 1 hour here and I was like, wait a minute, I'm on the wrong chart. Even when we created that daily candle, right? And we printed that new candle, when we printed the new candle, we never closed our body. Our body never traded above the island. We dropped. So it's a possibility for us to do that again here with the new island that we created, right? Because remember when we opened, right, on the lower time frames, when we opened, we created that island. Let me go back. Oh, I guess not going back anymore. Let me see. Nope, I got to redraw everything. It's all right though. But when we go back to the 5 minute, right, we created the island here. And yes, on the 5 minute, we have the bodies closing underneath it, right, or closing inside of it. But we want to see higher time frame, like the 1 hour or the 4 hour. We want to see bodies. We don't want to see a wick. We want to see a body on that island. We want to see bodies close in and under the island, and that's going to confirm what? That's going to confirm our downtrend, but it's also going to confirm that the island was taken out. Just reading the chat. Tank, I remember you speaking about making a terminology video. that takes a while. I'm sure you guys understand now. Let me see if there's anything else. Daily looks. Remember how you once said that sometimes it's for Dick. It's for you guys. All right. So we're good with the daily bias. I'm going to stop the daily bias video.